Hey everybody, welcome back to Trading a Smaller Account. My name is Mike Fairbourn, not Barb Armstrong. Barb does a great job with this class, and great to have you all here. Folks, she, I think, is still, unless she's on her way back from Maui, she's probably, getting sand in her, between her toes and drinking something out of a coconut is what she told me she was going to be doing. So there you go. She's having a great time, well-deserved. And hey, I'm looking forward to discussion today, though, with all of you. I hope you had a great weekend. Folks, today I wanted to look at really taking advantage of the benefits of a vertical trade. Different from, let's say, the short put in terms of just the amount of requirement, the margin requirement to put on a vertical trade. So I'll look forward to going through that with you today and really kind of sticking to a shorter term time frame and breaking it down specifically into a return on risk sort of a discussion, which I'm going to show you a certain way to look at return on risk that is balanced across a number of different potential opportunities potentially as we look at different paper trades as we'll go through here. And so looking forward to going through that with you. Folks, we do have in the chat with us, joining us here, we have Cameron May. Appreciate Cam being here as I've dived in and to this from another class. But we did get some prep time in, so looking forward to it very much. All right, folks, well, let's get started here. Options do carry a high level of risk and are not suitable for all investors. Information here is for general information purposes only. The paperMoney software application is for educational purposes only as well. Now, investing does involve risk, including the loss of principal and past performance of any security strategy does not guarantee future results or success. It's important to note that the paperMoney virtual trading application will not assign a short position early, which is different from a real trading account. And wanted to also note that short options can be assigned at any time, regardless of the expiration date. So with that being said, let's go ahead and share our desktop here and just take a look at the S&P 500, folks. It has been interesting as of late with the S&P 500 topping patterns. And we don't know if we're getting a topping pattern, but they can be a little bit complex, and they can be complex topping patterns, especially on market tops. It's important to kind of have a general sense of what the markets have been doing, and even as far as what different sectors are doing. Today, I wanted to look at certainly some sectors that are showing strength. If we wanted to look at, let's say, for example, the short put vertical side. Okay, so I want to break that down with you. But let's just see kind of what extent we're at here on the market. First things first, and I have been using this over the past few weeks. I want to take a look at the linear regression line, which does take a look at, it gives us a plot of time and price over a period of time. It's going to be a 1 year. And you can see that we have dipped actually below the 50%. These are 50% extensions of the standard deviations of the move. And we had done a pretty good job, you have to say, over a period of time of really kind of holding within this range. I know we dipped outside of it a little bit. I'm going to put on the 100% just to kind of see where that has been. But it's done a pretty good job of kind of helping us to pinpoint some of, or kind of get a sense of tops and bottoms along the lower end to see if we might get a bounce off that level. Because technically right now, as we can see this, we are getting a lower low and a lower high. There's your lower low. So lower low, we'll just go ahead and call this a lower high right there. And you can see on a short-term basis. When I say short-term, I'm really looking at about, it's getting into that intermediate term time frame. But if you look at this is about a 1 month time horizon, right? So it's about 1 month that we see fits within this range. And so longer term, we have seen these pullbacks. We can see over here about a month's period of time. That was a lower low and a lower high. What we really want to see extending outside of that 1 month. And do we go higher from here? Do we kind of, sustain a bounce and extend up a little bit? Let's go ahead and change this now. I'm going to take this off completely. Use kind of a standard linear regression channel, and just to see where the bottom of that line might actually be. This is using a 100% level on linear regression. I'll throw it out right now, and you can see here, going over a 1 year time frame, that we do have a little bit of range off the bottom that we could still go. In fact, down here was the last time we hit this point. With this, let's go ahead and just see where some of those longer term moving averages might be. I'm only doing this right now for this class because, well, here we are making a lower low and a lower high. We want to see what's going on with that. Let's go with the 100 first, and then we'll look at the 200 as well. There is your 100. So we're just breaking below the 100. Now, we don't have to stay below. I mean, sometimes you can break below and then bounce back up above it, right? That's kind of indicative, too, of a longer term chart. In fact, here is a 2-year to kind of help illustrate that a little bit. Okay, so that is giving us a 2-year time frame for the linear regression. You can see the mid-range, the bottoms, and the tops, and you can see that right here. It does represent this. Now, generally, a lot of times traders, we're going to want to look at a 1-year time frame to kind of see what the trends look like, looking at price action over a period of time, over that stretch of time. So there is your pullback. That's the lower. That's a standard deviation below the mean, right? The mean line, and then we have a 1 standard deviation trade below it. So I just want to give you some areas to kind of keep an eye on here. We're going to look at today, it's interesting too, because we're seeing a little bit of a sideways to down, and that's where those short put verticals could be interesting because we still technically are on top of a longer term upward trend. And so we're looking at the possibility of maybe a pullback at this, maybe somewhere around this range. We might find some support like we have done kind of historically over this 1-year time frame. Now, if I come down here too, I'm going to pull up the 200 here in just a second, but these were major high points here. This is major resistance, and we kind of held that a little bit through here. Let's just draw a line all the way through there, and voila. You kind of see we're getting a sort of a confluence of possible support levels. Now, I'm just going to put support over here as a question mark. We might see support, but you got your 100, you got your linear regression lower channel, you got longer term historical support, all the things we'd want to see in terms of possible support coming in. But I'm going to add in that 200-day moving average. Just typing this in real quick so we get it pulled up here. You guys have a sense of some of these additional ranges. Let's change this out to, we'll go to blue. Easier to see there. Oh, I got another blue in there. It's all the way down here. But you can see the 200 is actually all the way down to this level. Now, have we hit the 200 yet in this year? No. Instead, we've stayed closer to the 100. We've kind of broken through the 100 and bounced up above it. Looking at this year's trend, also using that lower linear regression channel, as you could see right there, we're getting very, very close to that point. So just some things to keep in mind. These can be helpful on these long, extended sort of diagonal, somewhat sideways trends that go off to the right-hand side. These are some of the tools that traders will use to kind of give you a gauge for that, because a bounce off those levels, obviously, any sort of a bullish type trade that we might be putting on, well, the markets collectively might bounce. Many stocks within the S&P 500 could bounce there. And just wanted to give you that so you have that as a guide going forward. Okay, so let's do this. I want to take a look at a few other considerations as we look at the short put vertical spread. Initially, I'm going to go back just to a daily. In fact, I'm going to just clear this off, go back to my standard chart here, and we'll go with anything here at this point. But I want to focus initially on Google here for now, or Alphabet. So we'll take a look at this particular setup. Now, a lot of stocks too are really, they've run up quite a bit with the market being up. We saw a look at the 2-year chart, with the market running higher, a lot of these stocks have run higher with it. And with that, it's really challenging to just sell a put for, and not have a huge margin requirement. Case in point, if we come over here on Google and I just take a look at the next month out, we're looking at February here. I'm just going to come down here and let's go ahead and just select a short put. We'll use, let's say, for example, a 30 delta. And I'm going to click on this. I'm going to talk about the delta here just real quick. But if I click on that delta, the margin requirement is about $2,800. If we were to do something where we just add in, we go long a put contract and kind of limit our potential gain. Let's just say we go a 5 wide here. It's only 131 in terms of the credit, but look at the margin requirement. It's $369, a substantial difference. Even if we ramped up the number of uh, contracts, it's very likely that we wouldn't exceed that 2,800. And we're going to dive into that in just a second. But that's a key point when you're looking at stocks that do have high values, right? They can be quite expensive just for a single contract in terms of what's, the buying power effect. Okay, now since I brought up that delta, let me hurry and quickly explain that. But and I know many of you know this, but just so that you're familiar with it, the delta it does impact the price of the option by the movement of the stock. So a $1 increase, just pointing up here into our underlying, a $1 increase, let's say $1 increase, would impact the option by the amount of the delta, this range here. So we can see over here, if the stock went up $1, well, this particular option, this is the 175 strike, would go up by approximately 78 cents. It's a positive delta. Over here on the put side, it is a negative delta, so $1 move up would push this down, and that is all else being equal, a positive when we are selling short put verticals or just short puts in general, right? Okay, wanted to explain that. Now let's do this. There is this concept here, and I'm going to draw this out and get, sorry, let's go ahead and just take the chart off. We'll just use a blank screen. And I'm sure Barb's mentioned this before. You guys are probably somewhat familiar with it, but in case you're not, I'm going to show you just kind of an approach that I think can be helpful as we look to really kind of streamline the process and make everything comparable as we look at ROR, or return on risk, which is a really great thing that you can do with these short put verticals. Return on risk. Now, to get a return on risk that's comparable, and a lot of times you need to make you need to have like some standard categories as we're making some comparisons here. And so today, with the short put vertical, as we're looking for price of the stock to be making higher highs and higher lows with the trend, because with a short put vertical or short put in general, it benefits from the price of the stock going sideways to up, or even down a little bit. It could go down even a little bit, and we could still capture our max gain. So with that, let's make some comparisons here for a return on risk. Now, with that, I'm going to be looking at approximately a delta of 30. Okay, we're going to use the same time frame as well. We're going to go out approximately 1 month in time, so we get some good comparisons here that are actually legitimate. Okay, and with that, our spread. So this is going to be time. Just put this over here so we've got this all down. Time, delta. These are approximates because it's difficult to get everything right at, let's say, a 0.3 delta. Okay, and then over here, we'll look at approximately a spread of about 5. It should be very close to 5. I think we can get 5s on a lot of these high-priced stocks, but that's going to be the range between where we're selling the put and buying the put. That level is what we're looking at. Okay, and so that's going to be the spread. Okay, between those two strikes. You have to make these comparisons if you're going to try to get a return on risk that actually makes sense. Okay, so the return on risk is just simply, what are we able to receive in terms of our credit relative to the risk, and the risk is the difference. It's the spread less the credit that we're receiving. Okay, and we're looking to find this as a percentage. Okay, because there's going to be a lot that we can look at here. But I think this can be an interesting way, all else equal, if we see a number of different stocks in the market that are showing, a stock that looks like this. It's making higher highs, folks. It's making higher lows. And we're anticipating a bit of a bounce in here, a bounce higher. Okay, that's what our expectation is. Well, then with that, let's just see what what kind of risk we're taking on relative to the credit we're receiving. If this is comparable, these kind of sort of chart setups. So it's just kind of one approach to look at here. Oh, let's see, Christian. Hey, we could go through it. Just any questions you have, throw those in and we could try to go through it. And Cam's doing a great job answering any questions in the chat as well. Appreciate that. Okay, very good. All right, well, let's do this. I'm going to go over here now and we're going to get to our charts. All right. Let's take a look at Google first. Now, when we look at Google, can you see a couple of different things? Now, you might see longer term patterns in here, but what I've done is really just tried to find some of the strongest looking stocks out there that I think, from the perspective of a technical investor, they might see it look strong. It may be strong, it may not. But I mean, in terms of let me categorize that. We're looking for those that have a trend and maybe some price patterns. If you look at Alphabet over here, you've got this kind of long. It looks almost like a cup and handle, right? You're holding this range, and all else being equal, that's quite a positive. We took out this longer term resistance level and we're holding into a tight range in here. So the next thing we can do is we can actually look at that, approximately 1 month out in time, a 5 wide spread with a 30 delta, and we're going to compare what that return on risk is, or risk on return. You know what? When it's ROR, folks, I can go back and forth all day long, right? Whichever order I want to put in. All right, so let's do this. Let's go ahead and take a look at that right now. I'm going to be using that front month as we mentioned. So here is our February. We're over here. Oh, we have a 30 right there. So we do actually have a 30 delta that we're selling. So that's the option we're selling. Let's click on the 175, 180. I'm going to click on the ask price for the 175, and voila, there you go. So it's about a 134 credit. By the way, just by contracts, just for the fun of it, let's just click on the 180 right now, the 180 strike. I'm going to click on it just one time and show you what this looks like. So yeah, so it's like $2,800, right? For that, we knocked it down pretty substantially by selling. And by the way, to do this, all I'm doing is I'm holding the control button down on the keyboard and then clicking on the ask side. So again, it is a short put, it is a long put, short put on the bid, long on the ask, and there is your 5 wide. Do you see it? 180 to 175. There's our credit. So if we look at this over here, we could see, well, we've got the buying power effect is 365. So the credit, the max gain we could receive over here is 135. You got the max losses we just mentioned also at the 365 as well. There's your break even up top. But that gives us a reference point. Now, how might we calculate this? What is that return relative to the risk? What percentage are we looking at? I'm going to throw out my calculator, and it should share here. It does. There we go. Let's go ahead and take out that. Let's look at the 135. Always be mindful of commissions, how they factor in as well. I'm just going to divide that by my 365. Okay, so that's about real close to approximately 37%. And that might be higher than some of the others I want to look at here today, but just keep that in the back of your mind. That's what the return is relative to the risk that we're taking on as we've defined it. The spread range less the credit would be the total risk, and you've got that all calculated here as your 365. And we just took our 135 again. I'll do it again so you can see it. We'll do it on a few others though, divided by 365. Okay, so let's kind of keep that in the back of our mind. That's where Google stands. Okay, so 365, excuse me, 37% approximately. Okay, any questions on where we're at thus far? I know chatting with Barb, you guys are pretty advanced and you pick up things really quick, but we might have people that are new for the first time, and I just want to make sure we're on the same page here. So let me know if you have any questions that you'd like me to show you specifically live here as we go through this. But that is a setup on Google. Now, what would this do? I mean, what would we be looking at here? So we saw the amounts we were looking to collect, and we know that we were selling that 180. So effectively, what we're saying is the price of the stock, we know it's been a little bit sideways here, but it's had a pretty decent pattern. It's holding this range, and the trend, that's a higher high from where it was before. So you got highs over here. You certainly have higher lows in here too. trends intact. There might be some patterns in there, bull flags, cup and handles, you name it. The money flow, one that I actually focus in on quite a bit, which tries to net out buying and selling pressure. Well, that's been incredibly strong. In fact, we've broken well above our prior high range, and it's heading in, it's heading to new high territory for now. Things can always change, but that's what money flow tries to show us, is that you're getting buyers coming in as prices go up. And that can always be a positive thing to kind of consider. Yeah, do we have prices going up, as the volume's going up too? Are they buying and whatnot? So this is what we're looking at here. And this is where a trade in the market gives you that neutral aspect, as we're selling the short put vertical. If the price of the stock were to go sideways, and look over here with me, we do actually have some pretty interesting prior resistance, which could act as support on a horizontal basis, right? If we go that low. But look at that 180. There's a big gap in there too. Well, it's not that big because I can't really put the G in there that well, but you can see there is a gap in there. And you have another gap over here too. Let me just draw this line. A few different touch points. I'm counting 3 touch points right there above the 180. So there could be that support there. And because that's where we're selling that put at, remember, folks, the whole idea is the price, as we kind of shown a little bit earlier, it's neutral to bullish, and that means it could go sideways. It could go down even a little bit, or really up as much as it wants. And what we're looking to do is just capture the full credit by the expiration date. Keep in mind there is earnings over here too. So that's something to keep in mind. Now, the stock's been doing actually okay. I mean, this was a pretty good announcement on earnings. The trend is up, but that needs to be also, since we're heading into earnings season, that's something to be noted, right? A lot of times people don't want to hold through that. But do we have enough strength to hold above that 180? It can go sideways, can go down. And again, it is, it's just not nearly, in terms of the buying power effect, as high as just the short put with such a high stock value. Okay. I think these shorter term trades, they actually can be quite interesting. Going out of about a month's time frame with the shorter term trend. So it does kind of fit a little bit into sort of a swing trade, sort of a time frame. And maybe it's 3 to 10 days, even up to a month's time frame, that you might be looking for the price of the stock to hold kind of in a sideways range. And that would do well on some a trade like this that has a little bit more time out into February as well. So if just the trend sustains itself, even going sideways, holding above a level, traders would look to capture that max gain. Okay, let's go to a few more. I want to take a look at these, and we'll just make a selection on one of these as well. But here is Arista. Okay, do you see the strength of the trend here? Again, what's that expectation? So we're looking at the price of the stock to really just either go up, just kind of sustain this general trend, or even go sideways or even down a little bit. Like we had a little bit of a downward move over here, but ultimately we stayed up. But what does that 30 delta look like at these levels? With a little bit, a higher spike in some of the implied volatilities. So let's just make that comparison right now. Let's go back over to our trade tab. We're still going to use that February right here. Let's find that 30 delta. I'm finding that 30 delta right there. It's a 31. So it's a little bit higher than we saw on Google, but it's right here. So let's click on it. That's the bid. And we're going to do a 5 wide right there. So let's click on the ask right here. So everything else is equal. 145 credit. We'll click on confirm and send and just see what our numbers are over here. So it's going to be pretty comparable, actually. Let's go ahead and take a look at it. And obviously, prices vary throughout the day, and so too would percentages. Let's take our potential return there, dividing it by that risk, 355. So that's a 40, almost a 41% number. So it's greater than Google in terms of just comparing what is my risk relative to my reward type thing. So that can be helpful. What was that level? It was over here. It was at 105. So the 105 is about right in here. It's a little bit of range, and you can see over here too what I want to do, because when I see that delta, where does it stand with support and resistance? And a lot of times when there's an upward trend, we're going lower on those deltas, and so it's very likely that we might run into some support resistance down here as well. So right through here, there could be support. It's a little bit lower than that. It's not quite 105. It might be just a little bit lower, but you're getting a general sense it's very close to that same sort of a pattern that we were looking at previously. Higher highs and higher lows. By the way, too, money flow, it broke into a new high just recently as well. So people that focus on this, all else equal, that would be a positive too. All right, let's keep going here. We're going to make a selection here. Now, this one I think is still, yeah, it's still in the 200 range. So AVGO, Broadcom, had a really good earnings announcement. Now, the thing is with Broadcom, we just got past the earnings. So we jumped up a little bit higher. Obviously, that was a good, basically a good feedback from the market in terms of those earnings. If I point to it right there, yeah, they beat it by about, I would say, 10, 11 cents, somewhere in that range. So they may have guided higher too. A lot of times you see these big gaps over there, big gaps after earnings when the company does guide higher. But notice over here too, within that big gap, we've been holding this support level. And really the nice thing is we're just looking at prices potentially being able to go into a sideways range, down a little bit. There's that big number there. Some traders will look at, there's 200. Sometimes these big levels can act as support or resistance. But down, sideways, over the range, all of that level in here. Traders are really just saying, that's where I'd like to try to make some potential option income from this, right? Okay, let's pull it up and see what we've got on the trade tab. So same month as always, going through those same criteria that we looked at, basically a month out in time. It's a little bit more than a month, but we're halfway, well, we're getting almost close to halfway to January. So choosing the February, the closest delta that we have is the 32. So there's our 215 and there's our 210. There's our 5 wide. I'll click on that 215 right now. Hold the control button down, and I'm going to click on the ask price right here. So it's 157. Now, the one thing you're going to note is those percentages, and you're going to just kind of see this over time. I should say the percentages are going to go up with the credit going higher too, but we also want to be mindful of, what is that buying power effect? So let's just take a look at that. We can see that this buying power effect is going to be held within, again, that 5-point range. But because that's a larger number, I guess you'd say numerator, in terms of the equation, 157, we should exceed ANET and Google both, divided by the 343, which is the buying power effect there. Now we're up to 45.7. So a lot of times these 5 wides, if traders can get close, this is just kind of a general rule. They normally don't like the 20 range, but if they can get close to approximately the 50% in terms of return on risk, that could be a sweet spot for some traders, investors. And you can see we've just kind of built up to that a little bit. Now, is this the sole consideration? No, not really. I mean, because there's just a few percentage differences between them, right? And so the credits that we're receiving are slightly less as we go all the way down to Google in terms of our return on risk, the total percentage. But so it's not huge, but it is something that could be used as a distinguishing factor on which option to select. Of course, the other thing is well, what about the trends? The trends are somewhat comparable here, but there are some differences too. As we go through and we're kind of trying to organize, hey, which trade would we select? Google had earnings coming up, whereas we don't have that issue with AVGO, right? Right over here. ANET would have earnings as well too. So that's a consideration now for some traders that are fine. They're totally fine with earnings, and they're very confident. Well, maybe that's okay to hold over earnings, but generally, if you're holding over earnings and you're really confident in those earnings, you might not be using like a spread trade because a spread trade has a limited return. Some traders might use like a long stock or a long option, whatever the case might be. Now, that obviously that would be expensive over here for 100 shares, but that just gives you just some things to kind of think through there. All right, so let's take a look at it right now, and I'm going to do this. So the first one we had over here. So I'm just curious where you guys might stand collectively, and I'm going to go ahead and put a trade in on that, just using the same criteria that we've got. So there is Google, just in terms of the short put vertical only, is this kind of scenario and setup. It's a bit of a cup and handle. It could have a longer term run as well, but just for short put vertical, the short put vertical only, here is ANET, Arista Networks, okay, and then AVGO. I've got a few more to show you, but of those three, I'm just going to throw a quick poll out here, and I'm going to go with whatever you guys say on that. So just let me punch this up real quick. Okay. And it's going to be Google, ANET, AVGO. So I'll give this about 15, 20 seconds or so. If you're able to do that, that'd be great. I clicked the poll, so hopefully it's going to come through here in just a second. But now you got a sense of return on risk. You got a sense of the patterns. We talked about earnings in there. We talked about other categories. Once we get this down, I'm going to go ahead and take it to the next step, and we'll go from there. All right, so it looks like AVGO might be leading the way thus far. I'll give it just another couple of seconds. Any questions you have, too, be sure and throw those into the chat so I can address those. All right, let's see here. How are we coming along? Good. I think we're about set. All right. Let's go ahead and end that poll. And we'll see what our numbers show. And it should pop up and populate it here for us. It has in the past. There we go. Okay. So appreciate those that participated too. So 69 votes in there. So the majority of you did choose AVGO. It did have the higher return on risk. It had we got past earnings in here as well. It's a higher price stock, but what was the benefit of it? Well, we're doing the short put vertical as a way to, it does cap the total return we could get, of course, on a credit scale. But at the same time, there's other aspects that we could be looking at with earnings, et cetera. We didn't actually look at money flow. Money flow is actually doing really quite well. In fact, money flow is really flat up here, indicating that volume has just been kind of dying out when people are selling. So do you see that over here? Another key indicator. Oh, you actually see, you can pick up on it. Look at this. So do you see the volume just really shelf dropping quite a bit? Now today's not done yet, but generally what traders will look for is strong upward movement on the upside with volume. And then when it comes time to sell, more people are just holding their positions. And look down here. Let me just illustrate this with the yellow so you can see it. Really quite strong. But yet it began to kind of come back down in this flat range. So people may in fact be holding onto those positions. So keep that in mind. Okay, well, let's continue on. What were we getting on this trade when we came back to the AVGO? We were just slightly higher. We were about a 31 delta right there. Okay, so by the way, quick note, this has over 11 million shares today. Very helpful when we're looking at liquidity. That can help to influence liquidity for sure. If you come over here and look at this, let's just draw a straight line across there. Open interest is about 3,400 contracts. So it's in the thousands, and that all else equal is a positive. Look at that. Isn't that incredible? A dime spread right now. That is amazing. I mean, I've seen these be so wide in the past. But a dime-ish, now it's 15. As soon as I said dime, it goes to 15, but it's a $200+ stock. So it's incredible. Just a tight range in there, which is very helpful if at any time we wanted to close that trade out a little bit early. But I wanted to highlight this. That's $650. That's $650 per contract. We were getting, I might shift just for the 655, just as it was there for a second ago. But as we looked at it, It's max gain over here is 655, just doing the short put. But let's keep this in mind. The buying power effect, folks, just under 3,400, just under 3,400 to get a potential credit of 655. But of course, did you see the risk on that? The risk was substantial. Yeah, because there can be an assignment if shares go below the strike price by expiration. It's very likely that there's going to be an assignment of shares, and then 100 shares for every contract that we have. Well, if the stock were to go to zero, for example, that's a pretty big loss for that one contract. Now we can minimize that substantially just by going over here and clicking on the 110. I'm going to hold the control button down and click on the 510. And what I refer to as minimizing is, what do we do? Shouldn't be there. Hang on. 650, and we'll click on the ask right there. Credit's 152-ish. Okay, so that's fine. We'll just go ahead and click confirm, send one time. Okay, so if we look over here, the buying power effect, 348, max gain, there's a credit, 152, plus commissions. I'm going to go ahead and just increase this to get close to, just as an example, the 655. Oh, why wasn't that going? It didn't. Oh, okay, there we go. We're getting close. So that's $600. We're not quite to, there's 608 versus 655. But remember the buying power effect over here was 344, just under 3,400. Look how much we've minimized that to, folks. It's just under 1,400 now from 3,400. So, I mean, a couple thousand off, right? That level. You see what we just did? So we still tried to increase to get that credit level very close to it, but the buying power effect is substantially less. Positive for trading a smaller account for sure. Now, I'm not going to do that many, but I just want to show you as an example how that can really be effective in lowering the buying power effect. Let's just go and do 2 contracts here as an example. It's up to 155 right now. So I'm going to go confirm, and we'll just look at it again here. So max loss 690, our credit is 310, and we'll go ahead and just send this through, and you can see the buying power effect is 690 as well. It's getting close to that 50% level. I went ahead and sent it through. Didn't hear a fill on it yet, but that is an approach I wanted to look at. All right, while we're waiting for that to fill, I did want to show you a few more setups and scenarios. As a quick note, folks, if you haven't subscribed yet already, I encourage you to do so. Bottom right-hand corner of the screen, there it is in my ear. It just filled. Bottom right-hand corner of the screen, if you'll click on the subscribe button, we'd love to have you on board. And if you like today's presentation, consider giving that like button a smash. Really appreciate that. I want to point out down here too that there are some other classes that we do teach. Now, I do teach a new class as of this year. It is swing trading, and for some reason it's eluding me right here. So let me just there it is. It's going to be somewhere over here. Let me just spot it and see. I might have to wiggle my head around a little bit. Okay. Why is it not? Okay. Let's just see here. Anyhow, we got a new class. That's where I'm at the very top. I'm sorry. Click it right there. So it's just here. And what we'll do in this class, I'm going to go ahead and just share the playlist in there if you guys are interested in these kinds of patterns. I'm going to be putting a lot of focus in on these patterns specifically while I have this class. There it is right there. So this is the swing trade playlist. And I'm going to show you a few that I've found just and see what you think in terms of similar setups as well. But if we come over here, let's go back to our charts tab. And I'm just going to highlight some of these additional ones in here. So here is one, VRSN. Okay, so strong upward move, right? Look over here with me. We broke above these highs over here over a longer term basis. Interestingly enough, we're actually getting Boeing in here too. Boeing, I don't know if it's going to form a longer term head and shoulders bottom pattern, but it could. This could be a shoulder, head, shoulder over here. It might dip a little bit and it might come back down into this range right in here, if so. Now, it does have earnings. I was just so fascinated to see actually Boeing show up. Here's a company, DRI, Darden Restaurants. You see the pattern? Similar highs, similar lows. This too is one that you could look at and say, well, hey, Mike, it did have that gap up on earnings and all else being equal. That's a positive market indication. With that, what did it do? It broke a longer term high range and it has this kind of a, whoop, got to change the colors, this kind of a pattern, kind of a cup and handle pattern right there. You see that right there? That could be considered as a positive. So, folks, take some time as a little exercise and take a look at, now that you know how to make these comparable, how about a return on risk on something like this that does look so similar. Another one that I've been looking at, tracking, I'm going to take a look at it tomorrow too in our class, the swing trade class in more detail, is this really long possible cup and handle pattern. Do you see it over here in snowflake? Look at this guy. All the way down here, it's a rounded bottom. Coming up here, bam, you got your earnings, right? The earnings gap. And what did you do with the earnings gap? Folks, you cleared resistance right there. Or how does James say? Resistance. Or is that how Cam says it? Maybe it's Cam. I'll give credit to Cam for that. Unless he doesn't want to take it. Okay. But look over here. Run up. Do you see the cup and handle? I made it two different colors. I'm going to make it one color now. Here we go. All in blue. Interesting. Sometimes these patterns can be interesting for trading a smaller account because you're looking for an upside move and maybe it's just long options you're looking at, for example, long calls or whatever. Some traders will look to trade these. Not everybody, but the traditional pattern is, can I say that? Extension might be the high to the low of the bottom, and then you got the breakout of the handle, and then you use kind of a similar price projection, which, by the way, not too surprising. I've seen this happen a lot. A lot of times they will come up and test this high. Now, we don't know if that'll happen. We're just exploring a longer-term cup and handle pattern because it's right there in front of us. But these are some, I think, of some of the patterns out there that might have momentum with the trend. They've got chart patterns. A lot of times they've been moving because they have positive fundamentals. They've had good earnings. And these are some of the companies that that traders might look at when they go into, let's say, for example, the S&P 500, and it might be, as we said, testing maybe some of these lower levels. Will it reverse? It's been a little bit weaker. It's in one of those weaker phases, but the trend is strong. But really trying to find the strongest of the strong. Folks, hopefully we did some of that today. We looked at it. We had sort of the pattern set up. Again, I'll take a look at that each and every week in that swing trade class, but and through my other classes as we really focus on these kinds of trends. But then we applied it to selling options, right? Specifically the short put vertical, and we made sure today that it was comparable in terms of the return on risk. Again, that's always something you want to do. They have to be comparable, right? So we looked at the spreads. I'm just going to put S for short. We looked at spreads. We looked at delta, and we looked at time as well. Now, I talked about some of that in an earlier part of our session if you missed that, but that's always a really helpful thing to do to try to get the most out of what you're risking as we're looking at those short put verticals. So on that, I would like to thank Cam for helping out in the chat. Great to have all of you here today. I look forward to future discussions. Great to fill in for Barb. I'm so glad she was able to take some time off and get a nice break in. I mean, Maui, how do you beat that? I mean, that's like, what do I do I live in Utah. Maybe I go to Wyoming or Vegas. I'm just kidding. I did go to Vegas last week, but it wasn't Maui. So she should be back, I think, actually this week. So expect to see her on Friday for the upcoming class, folks. And on that note, we'll see y'all next time. Take care.